Joyce, welcome. Retire into the stock market session 3. How are you?
I'm good. How are you? Thank you.
August 2nd, 2022. Notice behind me, even today it's down, though the Dow Jones is up 600 points from last week. Last week it was 31,900. Now we're in 32,000 and change. So we're going up. Have you noticed?
Yeah, with the, let me see, the SPY, yeah. The
SPY went up a little
the
bit.
S&P, yeah, S&P 500, yeah.
So if you have those good stocks, the top stocks, you're going to have that reward when they go up. When the market goes up, you're going to make money because you're going to be in those stocks. And if you select your stocks well, you might even outperform the market. For example, I think Tesla is outperforming the market, and it's going to continue outperforming the market because it's a great company. It's in what I call in favor. It's favored. Write this down. Tesla, TSLA, favored by the market.
I didn't buy
in
it.
favor, FAVOR, going up.
How much
It's
is it?
900. What?
How much is it today?
It's $900,
Oh my God.
up 15 points today. Now, you mentioned you were selling some stocks. That's great. So you sold Nokia. Like obviously it's a failure company. At one time, Nokia was competing with Apple iPhone, but as you can see, Nokia didn't make it, and they're not making the return that Apple can make. So they can't really compete with Apple. So that's why you can dump them and, for example, buy Apple if you wanted to buy a phone company, for example, product company. So you just have to look at the stocks, and you want to pick the very best stocks. Write this down. Choose only the very best stocks. So no Nokia, no BlackBerry. BlackBerry at one time was competing with Apple, but they couldn't do it either. So they're basically a failure company. And let me take that back. Nokia is not a failure company, but Nokia has no way to compete with Apple, and you're not going to get the returns of Apple. Okay, that's what I meant to say. BlackBerry is a failure company because at one time the shares were $40 or $50. Now they're whatever, the stock price is very low. Okay. I do want you to buy Tesla though. Why? Because Tesla's going to have a stock split. On August 4th, they're going to have a shareholders vote to split the shares. And of course, they're going to vote yes. And later in August, we're going to get a 3-for-1 stock split. So write this down, 3-for-1 with Tesla. So if the stock shares are $900 today, they're going to split to $300 each. Okay, so if you get just one share, you're going to have 3 shares after the split. If you can get, 5 shares, which is going to cost you $4,500, okay, you're going to have 15 shares after the split. So why are splits important? You'll hear people tell you splits don't matter. It's just an accounting trick. That's not true. It's not an accounting trick. A split is a very important factor that happens in the best stocks. And the stock, for example, the stock will split down to 300, and you'll have triple the shares. So based on that, there's no change in value. But because the share price is going up and up and up and up and up, that's when they split their shares back down to make it a more meaningful, a more attractive to the average shareholder. So what happens is you'll get a stock that splits from 900 to 300, but then it starts creeping back up 350, 400. Eventually it'll go back up to 900, then split again, and go back up and split again and split again. This is not the first time Tesla split. They did a 5-for-1 split 2 years ago, and already the stock is back up. So this is a rare event. Write this down, rare event in the stock market. Tesla TSLA 341 split. The rare event in the stock market, Tesla 341 split. Okay, and also put forward. It's a forward split. Forward split. That means you get more shares. A reverse split means you get less shares. A reverse split is bad news. Stay away. But a forward split is good news. So the idea is you want to buy the Tesla now, like tomorrow. The market's going to close in 10 minutes. But like tomorrow, you want to buy it because we fixed, I mean, it's probably going to keep going up. And after the split, after it splits to 300, it'll keep going up. Just mark my words. It's a major car company. It's in the pole position, electric car company. And it has, the competitors aren't qualified really to compete so much. And it's going to keep going up. There's a lot of push for green, gas-free cars. And it's really the dominant company for that. So we think, you know, it could double or triple in price in the next handful of years. Let's say within the next 5 years, 2027, Tesla stock is going to be, let's say it's 900. It'll be, let's say 2,700, 3 times. But if it splits down to 300, then it'll be 1,500 again. Okay, that's 3 times the value. That's just me guessing. I don't know for certain if it's gonna go up that much, but I say because of the stock split, it's very much in favor, and it's a very bullish move. Okay, bullish. You know what bullish means?
Yeah, like people are hoping it goes up. The
Bull
potential
goes up, and then bear
is down.
goes down. A bearish event is like if the company misses its earnings. Just recently, Roku missed its earnings. ROKU. It went from 90 to 60. It went down 30 points, down 30. But then it started going up, so it's back up to in the 70s. So even a good company can miss its earnings and have a correction, but and that's like a bear event, and a bull event is like a forward stock split, or to make their earnings. These are good events, and it drives the price up higher. Okay. Questions on that?
Yeah. So getting at 900 for the Tesla.
Yeah,
Is
buy that market.
is it do like stock or the option? That's why I get confused.
How do you know how to buy an option? I didn't even tell you how to do that.
No, you didn't.
You're buying stock. You can buy right now within 9 minutes, and you can put market orders. If you have free cash, just buy the stock and put market order.
Let me show you what you're talking about. You're saying I was in.
Don't show me right now. Just tell me, okay? You go in your account. You put Tesla.
What is this? I can show you because they're recording.
Don't show me.
Oh, got you. Yeah.
Just tell me. Just tell me. What do you want to tell me?
I have this saying cash available for withdrawal with margin.
Okay, don't say the number, but it's $900 per Tesla share, right?
Yeah.
So get one or a few shares, put buy, and then put
with the
margin. Okay, so what you want to be able to do is add up all the value of your stock, okay, by hand. So let's say you have 10 positions. Each position is $5,000, okay? That would mean that you have $50,000 in stock, okay? You see? And margin would be if you have $50,000 in your account, you have $50,000 in stock, then you're maxed out. But they're going to let you buy, more because of margin, right? So the margin would be borrowing money to buy more shares, right? And we mentioned that we want to keep you at a margin, right? So we can keep you at a margin. You can go ahead and buy Tesla. I can go over the account with you and make sure that you stay at a margin. We can sell those weak positions that aren't making money, that are dragging your account down. and buy more stocks like Tesla. And did you buy any stocks, by the way?
I didn't buy. Mm-mm.
You just sold Nokia. That's what you did.
Yeah.
Okay. Let me pause the recording, and I'll come right back to you. Okay. Congratulations, you bought 3 Tesla shares. So what we're gonna do, we're gonna look at your account, and we're gonna identify about $3,000, which are basically weak positions that haven't made you any money or have lost you money, and sell those. Okay.
Mm-hmm.
That way you make up the room. And I'm going to teach you how to exactly identify what's margin, what's cash, what your percentage is. I want you to write this down. Percentage 0/0, the percentage sign.
Uh-huh.
That is going to be your percentage of cash to margin. So you want to have that. You want to have that 100%. Okay.
Say that again, like percentage what?
The percentage should be 100%. That's your
Okay.
goal. Okay. So
Okay.
you're using all your cash, but you're not using margin. If you listen, I use some margin sometimes because I'm trying to do like cover call when I get 100 shares. But what I do is I can sell my weakest position and then relieve that margin, so I'm back in cash. Do you understand?
Uh-huh.
So being a margin for 1 day or 2 days is not really going to make any difference.
Okay.
Okay, so I'm going to show you how to look at every number and know exactly what it is. Okay.
Okay.
I don't want to put that on the recording, so that's why I paused it. All right.
Okay.
Okay. Now, congratulations, got some Tesla.
Mm-hmm.
Prepare to have 3 times the shares, and I propose it'll start going up. Now, can't guarantee it'll go up. It's not guaranteed, but it's one of those stocks that is in favor. People are it's on the buy list. People are buying it, and it should go up. It's a good investment. And if you dump the garbage you have in your account, it's not making any money, that you're exchanging it for something good, that makes sense. Okay.
Mm-hmm.
Okay. Questions?
No.
Okay. Now, I want you to get together a core 10. Okay, write this down. Core 10. CORE 10. What that is 10 stocks, 10 top stocks that you like and are comfortable with. The reason that you want to have 10 stocks that you're comfortable with is because you don't want to have to look at 40 stocks or 100 stocks or other stocks in the Kramer list. You want to be able to learn to study these stocks that you selected that you think are great, that you can get behind, and that you think are the best stocks for you and for the future of your account. And you're gonna be like a connoisseur. You're gonna be like a student of these stocks. You're gonna follow them and look at the volume, look at the trading. You're gonna see, what makes them tick. What the products are, the services, and you're gonna be able to compare them to the other stocks in the market. And over time, you can change 1 or 2 or 3 over time, not in 1 day, and you can exchange those for even better stocks, and then you can change your core 10 to always have a solid, excellent core 10 stocks list. Okay, that's your focus. Okay, so questions?
Okay.
That's your focus.
Okay.
Your focus to have 10 excellent stock market companies. Now I know you have a lot more stocks than 10. So I'm not going to force you to sell everything except 10, but I want you to realize that if you can identify 10 of the best stocks in the market, if those are the best ones, then you don't need the rest of them. You know what I mean?
Mm-hmm.
There's no reason to have the other stuff that's not great. Like, you come to me, you want to learn about stocks, I'm telling you, You need to have great stocks, great selection, period. And we're doing dividends, cover calls, long-term share growth, and we're going to do trading. We're doing 4. We're doing dividends, cover calls. That's 2. 1, 2. 3 is share growth. And 4 is trading. Now, a dividend stock could be like PM. Like here, like look at PM, it went up today. I want you to know that we have a down day today in the market. So like Apple's down, Starbucks is down, but like PM is up. It's a dividend stock. What happens on down days often is that your dividend company will, and Netflix is down 5, down to 220. So in a down day, often the dividend stocks may be up because they're gonna operate reverse the market. That happens a lot, right? So that's just something to know.
Oh, when the
Okay.
stock, okay. So the dividend stocks are usually up when the other market is going down?
Sometimes. It's just I just know this stuff. Yeah, I'm trying to tell you. So just because the market's down doesn't mean all your stocks going to be down. Your dividend stocks could be up. Okay. It's just something to look out for. A lot of people think, oh, the market's down, so we lost money. Well, hang on. Philip Morris is up today, 26 cents. So not down. And then sometimes, unfortunately, when the good stocks are up, dividends may be down. Because why? Because they're more quiet, because people are selling Philip Morris, so they can buy Tesla, so they can buy Apple, so they can make some money, because the dividend is just 5% a year.
Yeah.
And we do get some share growth. Like you can get some share growth with Philip Morris, but it's not going to be a lot of share growth. You're not going to miss anything. Like, if you sold Philip Morris because you want to get into the Tesla stock split, great, because Philip Morris is quiet, it's slow, The risk is that Tesla will go down and you lose money. That's always a risk. I'm not going to tell you it's no risk. But if you're going even from a great dividend stock into Tesla just to participate in the stock split, I say that's meaningful, that's fine. You can probably make some money, And for certain, you want to dump any garbage stocks that aren't making you money, that aren't great stocks, that don't have a great profit, don't have a great volume, don't have a PE, price earnings. A PE needs to be positive, plus 28, plus 20, plus 100, a positive number that shows profits. If there's no PE, right? No PE equals no profits.
So what does exactly in simple lay terms PE? I know PE price is like the cost of it's like capital divided by the earnings.
Just put price earnings. I'll explain that later. I don't want to. All you need to know for step 1 is a positive PE means profits. Okay, PEs go for anywhere from like 5 to 20. Okay, but you want to get a PE that's even higher, because you want a PE that trades higher, because that means that they're in favor, that the shareholders, that the investors are willing to pay a premium for that stock, right? And these are hot stocks. So PE could be 5 to 20, but you want to do 28 plus, put 28 plus. And all I want you to know for now is that PE means profit. If it has a dash, if it has a negative, that's losing money. Don't buy it. Don't buy the company.
Okay.
Now PEs can change, right? So PEs can change, of course. So it's not like they're always going to show a positive PE. Sometimes a company will have a negative PE for 1 quarter or 2 quarters, but they have to jump back on a positive, because that way they're showing profits. Like, I don't think Apple will ever have a negative PE. It doesn't make sense. I don't think Tesla might, because Tesla, is running close, very slim margins. I don't think Philip Morris ever have a negative PE. It could, like if they have a big lawsuit or they have something happening, but normally no. Normally these big companies on your core 10, you want to always have a positive PE. And if it loses a positive PE, You want to look at it with a very critical eye. Like maybe we need to cut it because we want stocks to always be profitable. Coca-Cola will never have a negative PE. It's in 150 countries. They know how to make a profit. They know how to make a product. They know how to sell it for a profit. It's not going to lose money. It's just not, In theory, it could, people forget to drink Coke, whatever, but it's not going to happen that I can think of. Skechers, Nike, same idea. People are going to buy shoes. They're going to buy apparel. In theory, they could make mistakes. They can, something, but normally they're going to always show a profit. Okay. So when I get you into Starbucks, when I get you into not Starbucks, but Starbucks too. When I get you into Nike and Skechers, it's because I've already seen that they're a great company. I've already seen their profits, their revenue, the share growth, the share growth is what's important because the stock's going up. Share growth, stocks go up, right?
So when you talk of share growth, are you looking at the graph or what are you looking at? Okay.
Look at that. Write this down. 10-year chart. 10-year chart.
What did you say?
10-year.
Okay.
10-year chart.
10-year chart. Okay.
5-year chart. 1-year chart. 10-year chart. 5-year chart. 1-year chart. And also 6-month chart. If you're trading stocks, the most important chart is 6 months. Okay. I mean, I'm going to teach you how to use a 6-month chart. Okay. Then you have 1-month chart. You have a weekly, and then also a daily. Weekly and daily chart. A daily chart will show you Tesla went up 15 points today, or it was that when I looked at it. Netflix was down. Philip Morris is up 20 cents. Netflix was down, 5 points. Can you see it at the bottom? That's the daily. This one is the daily. I can put the 10-year or the 5-year separately. I can look at those separately, and that's when you can see your share growth. If you have a company that doesn't have good share growth over 5-year, 10-year, 3-year, 2-year, you need to be able to dump it because it's not making you money. Whoever told you to buy it, obviously, they know what they're talking about. Sometimes, a company that's doing great might fall off the wagon and not do great anymore, and then the price goes down, or it may stop performing well, and then you just have to cut it, But if you look at these stocks, and if you look at the ones I'm going to show you, and if you look at your core 10, it should be going up like this over time, just going from the bottom left to the top right.
Okay. And
that way, that's a proof of excellence. It's a proof of performance, and that's what you want to be investing in.
Okay.
Coca-Cola, Philip Morris, Apple, over 10-year chart, right? Even Netflix, even though it went up to 700, it still has a great 10-year chart because 10 years ago it was like, I don't know, like $5. And now it's like 200 something, right? So you do have to be prepared for, in case of Netflix, a correction in a particular stock. But But you can still stay with them if you think the outlook is good. They still have profits, if they still have a good volume, good chart, good PE, right? And if they pay money either in the dividend or the cover call, like Philip Morris and Coke have a dividend. Netflix has a cover call. Netflix pays cover call about 4% per month. So there's reasons why we're investing in the stock. I say Starbucks is a share growth stock. So for share growth, put Starbucks, SBUX, share growth. For trading, I would put let's talk about trading next week. For cover calls, I would put Netflix, NFLX. I also put Skechers, SKX. I'm gonna also show you Tesla, TSLA. Now, you need a lot of money to do a cover call in Tesla, but that price is going to be reduced because it's going to split 3-for-1. So one big thing about 3-for-1 splits or any forward split, so more people can do cover calls. So that's going to, just based on that, it's going to bring the price up. because more people are going to be buying blocks of 100 shares to do the cover call. Remember, a cover call, minimum 100 shares. DC equals 100 shares
per contract.
minimum. Yes, yes. And write down 3%, 4%, 5% plus per month. That's where the real money comes in. I mean, there's a lot of different trades you can do in the stock market, but few of them are going to get you 3 to 5% return per month on average. That's what a cover call can do. And if you have a core 10 stock list, one of your cover calls could be Netflix and Skechers, or AMD, Advanced Micro Devices, or NVIDIA, NVDA. And these stocks pay a great cover call. And just keep once a month, and you'll see the income coming in, and then your account will build up. There's things that will happen. The stock may come down, but whatever happens, you're gonna look at it. You're gonna be able to. I'm gonna teach you how to make the right decision. When you look at it, there's gonna be like this. It's gonna be like clockwork. You're gonna know what to do, what trade to do, when to buy, when to sell, when to hold. Questions?
So for Coca-Cola is dividends, not in the covered call, right?
Say it again.
Coca-Cola is like a stock to hold for dividends, not for covered calls.
For dividends, also for share growth. Put dividends KO, and then also put share growth KO. Yeah, Coke is a slow stock. It's a slow company, but it's a very stable company. I think it's about $60 a share right now. Can you look it up? It's 100 years on the stock market. It was over $60 a share when I looked at it.
63.
63, good. And it has long-term share growth. Like if you press all, if you go to Coca-Cola and put the chart on top, press all, do that? And then push your button on this app behind me. Push your button on the Coke and slide your finger all the way back to the beginning. And if it's $66,
$1.
It goes back to $1. So it's showing you 66 full return, 63 full return. So $1 went to $66, $63. So that is a company you want. So dump all the garbage that doesn't do that. Replace it with companies like Coke, like Starbucks, like Skechers, like the ones I'm giving you. But you have to select your own core 10. I don't want to do it for you because why? Because it's your creation, your investment. I can give you some choices, but you need to make the final decision, okay?
Where do I find all these companies? There are how many companies do we have in the stock market?
Well, remember, we're going to keep to the S&P 500, right?
Oh, okay.
The S&P 500 is 500 companies, right?
Yeah.
Out of those companies, I say probably maybe only 1/4 are good.
Wow.
So now we're down to 125.
Oh,
so out of the 6,000 stocks that are out there in the US, only about 125 are really good. And that's why you want to be a shrewd stock selector. You want to be very careful and very specific, and you want to be, you want your investments to be excellent.
Okay.
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 Questions?
So what's a good volume?
2 million per day.
How many?
2 million shares per day. Volume. Now, I like to say minimum 2 million shares per day, but there's exceptions. But just say volume. Put 2 million shares traded per day, plus or more.
What does that mean? Does that mean those are the shares available to be sold?
No.
Or those are the ones people are holding?
No. No. That means people bought and sold. 2 million per day. Traded. You bought 3 shares of Tesla, right? That's 3. So it needs to have 2 million per day to be good.
So it's a combination of bought and sold. So you won't be able to know how many were bought. So it doesn't.
So yes, a bought and sold is an exchange. Somebody buys it, somebody sells it.
Yeah.
But regardless, that's a volume. So 2 million means there's 2 million shares traded per day. Now it could be 1,000,008. I'm not saying it has to be exactly 2 million. You know? It depends on the price. So the price is really high, like Chipotle, which is $1,800 a share. Then, well, not yet, but close. That's like 10 times the price of a $180 stock. So if it's 2 million for a $180 stock, then Chipotle can have 200,000 because if the share price is 10 times, then the volume can be 10 times commensurate. So it's Chipotle, which is CMG, okay. Let's say it's 1,700, okay. And let's say Apple is 165. Chipotle is like 10 times the 10 times the price. So Apple has 2 million. Chipotle can have 200,000, 200K. You know what 200K means?
200,000, yeah.
Yeah. So it's 10 times the volume, it's 2 million. And if Apple's 165, 10 times the share price is 1,700, 1,650. So that's the example. Most stocks like Coke, Philip Morris, you know, they're going to be, you know, 2 million or more a day. But do you know how to find the volume per day, the average volume per day?
I can see it in the average on the chart down there after the 52-week low. There's an average volume.
Give me the average volume for some stocks. You have Coke.
Coke is 17.37 million.
10.3 million. Good. Give me Philip Morris.
PM is 5.4.
5.4 million. Now, can you give me Netflix and FLX?
And FLX.
We're talking about that, putting that in your core 10.
And FLX.
You don't have it?
11.3.
11.3 million?
Yeah, for Netflix, yeah.
And then give me Tesla, TSLA.
30.87.
30.8 million. So Tesla's really heating up, you know. They're gonna do a stock split, people are jumping in the stock, there's more buying and selling, the price goes up. So you're looking at solid companies. This is why they're solid. They have a good stock, they have a good 10-year chart. 1, they have 2 million volume a day. 2, they have a PE. 3, do you see what's happening? Now we're starting to identify good stocks, okay?
Yeah.
They have a dividend. 4, they have a cover call which pays 3 to 5% return on the cover call a month. 5, and I'm going to show you how to do that. We might do that next week because I don't want to give you too much. But do you understand what we're doing? I just identified 5 selection for criteria for stock selection. Identified 10-year chart. It has to go from the bottom left to the top right, or it just has a good return over 10 years, over the last 10 years. PE has a profitable PE, which means it makes profits. Volume is 2 million a day or more. They have a dividend and they have a cover call. You see? So right there is 5 stock selection. There's 10 stock selection. I'm gonna tell you that in 10 in the weeks to come, but start with the basics, okay?
So volume 2 million, PE above 28, and dividends, and the chart, and then
okay. Let me clarify. A PE above 28 is a stock in favor. It's like Tesla would be. I think Tesla's like 100 or something. The point is, not all your stocks are going to be PE more than 28. For example, Philip Morris, Coca-Cola. These are solid stocks, very stable. They're not going to have a PE over 28. Okay, so these ones are going to weigh your account. It's going to balance your account. A dividend is going to balance your account. Coca-Cola, Philip Morris, etc. But then you have stocks like Tesla, like Netflix or AMD or NVIDIA. Those ones are going to have a higher PE. So those ones you're going to look for a PE of 28 because those ones are going to be share growth stocks. They're going to be long. I don't want to say more risk investments, but they're more risky. I want to say they can give you a higher return. So put PE 28 plus equals higher return. And then put PE 5 to 20 equals stable. Stable. Which means they're not going to double or triple. It's not going to happen for Coke or for Philip Morris. It can't happen. They're too big. They're established, you know. But other companies like, you know, Roku, AMD, NVIDIA, Netflix, these ones can double. Skechers, Starbucks, I think can still double. It's relatively small. I'm going to go over everything. You'll see, little by little.
Okay.
Question.
Okay.
I want you to make good notes. I want you to be able to write these notes over.
Yeah.
And show them to me and make them neat. And if you have any questions, please ask me because I'll go over it a different way. I'll explain it a different way so you can get it. I'm going to go over it so you know exactly what I'm talking about and what to look for in stocks.
Okay.
Dump the junk. Select excellent positions. If your positions aren't working out, maybe switch them out. Get better positions. If you want more return, you have to go higher PE. If you want more stability, like safe, less return, go lower PE. Makes sense?
So
like, go ahead.
I do want to forget the margin since I want to say, or do you want us to talk about that later?
Let's talk about margin. Okay, so you just bought 3 shares of Tesla. So take that price, that cost, and sell that amount of shares that you have in the position that you don't really, that it's not making your money. I know you're worried about taking a loss, but you have to take a loss because, like, look at things like this. You're a money manager, okay? You have a responsibility to manage money. Some of the money you're managing is from old people who are going to retire. They need that money for retirement to live off of. They've worked all their lives. They have a 401k. Your job is to make money. And if you have an investment that's losing money, the boss is going to come knock on your door. Joyce, what's happening? What's going on with this account? We're stocks are losing money. You know, you can see Tesla's going up. What are you doing? Sell the junk you have. Buy the stocks that are going up. Right? Buy the stocks that have great return, profit, volume. You see what I'm saying? No choice. And if you don't do that, what's going to happen? If you don't make money, and your job is to make money, what's the boss going to do?
Just fire me.
Exactly. And this is what I want to talk about, Mr. Morgan. By the way, do you want to work for a woman or a man? If you were managing $1 million, would you want to work for a woman or a man?
A man. Okay,
so Mr. Morgan comes in. He has a nice suit. He has a tie. His tie is gold. He has a golden tie. Okay. He has old money. He has old family money from Texas. He has a Texas hat, you know. And he comes into the office, and you are a money manager. He hired you to manage money. Now, Mr. Morgan doesn't trade stocks. He hires traders. His name is on the building, Morgan Investments. And when you get your paycheck, it says on your paycheck, Morgan Investments. He signs your check. He's the guy that owns a building that you work in that pays your check. Okay. Here's a scenario. Your job is to make money. That's your only job. Okay. If you don't make money, you get sacked. You get fired. That's all it is. So you can't get married to your stocks. You can't be in love with your positions. If they make money, you keep them. You buy more. If they lose money, what happens? Sell them. So you can't make a monthly return. You're gonna be fired. That's it.
Okay.
So think of it like that. You know, it has to do with dollars and cents. It doesn't matter what you think besides that. It just matters if the account's going up
or not.
Yes, like for example, I'm telling you, Dow Jones went up 600 points this last week. So your account should be higher, you know? Now we know that your account didn't do great in the last 3 years compared to the Dow Jones, because we already said the Dow Jones went up 18%. And some of your positions didn't go up. So you have to think, hey, Mr. Morgan comes, you could be fired. So you have to clean it up. You have to clean that up, you know? When you say you're worried about taking a loss, you already took the loss. It's already lost. So fix the error, right? Do better. You do some of these strategies, and you're gonna improve your accounts and make money. That's what we're doing.
Okay.
Questions?
No, I'll take a leap of faith.
Yes, faith. I think we need faith in life. There's no one's gonna tell you this is gonna work out perfect. I'm gonna save you from all your troubles. Just life is not like that. You gotta take a leap. You gotta use your heart, use your mind, take a leap of faith. Is something that you want to make happen, and you make it happen by doing it. You can't talk about it or read about it. You gotta actually do it. You're not gonna learn how to swim without going in the water. You're not gonna learn how to do stocks without doing stocks. You can't read a book about how to ride a bike. Like if someone say, "I'm gonna ride a bicycle," what kind of book do you have about that? What are you gonna say to them?
I see. So okay, so with the volume, how it should be like how many years? You said it should have average 2 million per day, but for how long? Like the way you're talking about the share growth, look at the 10-year chart, 5-year chart.
That's a great question. For how long? Well, here's the thing. They only tell you the average volume for the last 10 days or the last 30 days. So when you see average volume, that's the one you go by. If you notice that the average volume doesn't maintain to 2 million, then it really wasn't a high volume stock. Like you can have a stock that gets popular, like Palantir or something that's popular for a little while, and then it goes quiet, right? So that's not a correct stock for average volume. You want an average volume that not only is 2 million a day, but always stays 2 million or more, always.
How do
So
I
you
check?
look at average volume, and if it's 2 million, then that qualifies. How long? I mean, currently, that's how long to be currently doing that.
Okay, like right now, Tesla has 30 million. Is that it says average volume? Is that volume for today or it's an average for the last 10 days?
That's either average for the last 10 days or for the last 30 days. Okay.
Last
But
30
here's the
days?
thing. Yeah, but here's the thing. When you get a stock like Tesla, we know that it's a popular company. We know that I'll tell you the volume for Tesla has been 2 million, like more than 5 years.
How do you tell that? How do you know that?
I know from experience.
Oh, it's not like you go somewhere and you click and you check, okay, a chart or something.
You can there's a graph at the bottom. It has the volume on the graph. You can see the volume on the so the top has there's a chart on TD. Look on TD. Look in there's a button that says investments. It goes research. It says research. Click research and then put in your stock. Apple, Philip Morris, Starbucks, Skechers, you name it. Okay, Tesla.
So I go
on the top. On the top, they'll have the chart. Then at the bottom, they have the volume. You'll see the volume of the chart, so you can see it's more than 2 million. You can see that. But once you look at it, you don't have to keep looking at it because that kind of volume is going to maintain the same. It's not going to really go away. If it goes away, then it doesn't have the volume anymore. So now it's not a correct. It's not the criteria anymore.
Are you talking about this? Let's say the average volume 10 days.
Yeah, but the one on your phone doesn't have the volume on the bottom of the chart. On the computer, on the PC, it'll show volume on the bottom of the chart. It'll show you the chart going up and down, and the volume below that. In a bar, it has bars like this.
Oh, okay.
That's the volume. It doesn't show on your phone, but yes, the number 10 days average volume. That's the average volume for 10 days.
So that's what I should be looking at for 10 days.
Yes.
Because that's all they give. The maximum they give is for 30 days.
Yes, you can do more research if you're really concerned about it. You can do more research and look at the charts on research on PC, online, on your account online, not the phone app. And I'll show you the volume on the bottom of the chart.
Okay. Okay.
It shows columns. It shows bars of volume like this on the bottom.
Okay, and then when you look at the growth chart, with all the graphs, they're so different. Daily charts are different, 6 months chart are different. So you told me to go with the 6 months. Like look at Tesla,
Okay.
look at this.
Okay, the 6 month means the current is a current movement in 6 months.
This is Tesla's.
Right. So look at 10 years. Look at 10 years. Can you put 10 year? Start with the 10 year, then go 5 year, and then go lower, and all the way till you get the day chart.
This is my phone, so I think the maximum it gives me is 5 years.
Slide it over it, and it says all. It says all. Slide it over.
Oh, I mean the TD Ameritrade. Okay, I need to get out and go to the, okay.
Go to the one on your phone now.
Okay.
And go all.
Okay. Yeah, it looks, so
That's
the
how
one
you know it's a great stock. Now do a 10 year. Do a 10 year on that. That's the first one you want to look at, 10 year. Do a 5 year. Do a 5 year. See how it's going up?
Mm-hmm.
That's what a good chart looks like. Okay. Now, the theory is that a good chart will keep doing well. Okay. It's not always going to be like that, but if you want to get a good stock, you get a stock that's currently good, and the theory is it's going to keep repeating, it's going to do good. I'm not going to say it's going to keep doubling and tripling, but sometimes it does. You know, if you get a terrible stock's going down, they have no PE, they have no volume, they're not going to do nothing. They're not going to turn around. Okay.
Yeah.
Because why? Because they have the same CEO, they have the same president, they're doing the same things, they're making mistakes, and their company is not favored, and no one's going to buy the stock. Why? You know, so stop listening to the news and just go by technicals.
I'm trying to master the graphing. This is WHF.
Yeah.
For 10 years.
Right. So that one is different because why? Because it's a dividend stock. We don't expect to make a lot of money on the share price. Because what that's not showing the dividend they paid. Okay. When you count the dividend they have, then you realize that that's a great company because it pays about 10% dividend every year. And also the price doesn't go up, but the price maintains. That's the important thing. It maintains.
Okay.
And that's for dividend stock.
Oh, okay.
Questions? We're about to wrap up. It's your third session. You're doing great. Do you want to review first and second session? I want you to learn this stuff, you know, and as we go through the weeks and the sessions, you're gonna start learning it and using it and learning it and seeing your account move and seeing these stocks. You're gonna know the difference between doing an awful stock and a great stock. That's my goal, is to teach you.
Okay. So with the margin, I have to do this within 2 days. So what's the interest rate in case I do 10 days a month? What will happen to me?
The interest rate?
With the margin, what will happen? Yeah.
Nothing. I'm gonna try and tell you. I'm trying to tell you the right answer. Nothing will happen.
Then I won't get.
There's no charge.
Oh,
the
really?
The charge. Okay, so the charge for interest is like 8% per year. Okay.
Oh, okay.
One of 2 days is going to be like 2 cents.
Oh. Okay.
Understand?
Okay.
So it's not meaningful. I'm telling you, you bought X dollars in Tesla. Sell stocks equal to X dollars that are worthless. Honestly, like, why keep it? Mr. Morgan's going to come look at your account. And what's he going to say? He wants to have stocks like Tesla. He wants to have stocks like Apple. Look at Apple. Look at Tesla. Look at Skechers. Look at Netflix. 10-year chart. That's what you want to have. You don't have that, I don't know how you make money. You know, there's other ways. Listen, there's other ways to make money. You know, you can trade, but I'm telling you the basics, right? You got to have excellent selections. You got to have great companies. And from there, we start learning how to make money, dividends, cover calls, share growth, trading, right?
Mhm.
If you start with crap, you're going to end up with crap. If you start with something great, you probably make some money. You probably outperform the market. You probably make good money over time. Get some cover calls in there. You start getting income, start getting dividends, start getting income. Baby steps, little by little.
I have another question. I remember the Royal Caribbean. It was doing really well. The Royal Caribbean, the cruising, the sailing.
It was doing well. Are you sure?
Royal Caribbean was in the 150, but with the COVID, the prices went down. So I bought that with the airline industry. I had like the Carnival, whatever. And now when I look at the prices, they're all down. I was thinking travel industry should be coming back up now with the COVID going away.
Joyce, what do you, Joyce? I never told you to do that. You're trying to think. You're trying to listen to what you're saying. Oh, the COVID's going away, so the travel industry should go up. So now my stocks will go up. I never taught you to do that. Do not do that.
Okay.
You have to go by the exact results. Okay.
Mm-hmm.
The cruise lines were having problems before the COVID. So why would they be doing good now? Do you see what I'm saying? Look, pull up the 10-year chart. You have Carnival Cruise?
I saw that one. I have CCL. What is CCL?
DCL?
CCL is what?
Carnival.
It's Carnival, right? Yeah, Carnival.
Okay, show me the 10-year chart on Carnival. 10 years. This is before the COVID. Okay.
Before the COVID. Okay, CCL.
Give me the 10-year chart. Pull it up on the top of your app.
Oh my God.
It'll tell you how much money you're making.
Okay, CCL right now. This is the chart for 10 years.
You know why it's red? Red means down. Listen, the hardest thing for me is to tell the client that their stock is garbage. That's the hardest thing, because you think for some reason that you get a good stock. No. Listen, when Mr. Morgan sees your account, they get very angry. Because what? Because you're trading money. You're responsible to make money. Okay.
Mm-hmm.
You need to dump that stock. I would never told you about Carnival. It was never good ever. And especially it's not in the COVID. And guess what? They're talking about bringing the restrictions back. They're talking about monkeypox and all these ridiculous things. It's not going away.
How come
the
the
travel
volume
industry
is
has changed? Hang on. The travel industry has been destroyed. Okay.
Mm-hmm.
Period. What are you talking about? You think your stock's gonna come back? Look at the last 10 years. Go by facts, not by what you think. Right? Look at the PE. What's the PE?
Negative.
Negative.
Yeah, but the average volume is 53 million. Why is the volume so high?
It has volume. It has one thing. It has volume.
Yeah.
One.
Mm-hmm.
No 10-year chart. No PE. Okay. Do you see where this is going?
Mm-hmm.
Dividend?
No, nothing.
No dividend. What am I gonna do? How do you make money? So
what is market cap, by the way? What is market cap?
What I would do is dump that first thing tomorrow. That's what I do. Then you have money for your Tesla, and you can buy more Tesla, you can buy more Skechers, you can buy these stocks doing great. See, you have a preconceived notion of something you just learned on TV, you learned in a book somewhere, in a seminar. Listen, all those gadgets are designed to keep people poor. I'm gonna tell you a little secret. If you know these seminars, they get you to buy stuff.
Yeah.
You know, listen, if they taught people how to make money, the person would never have to go to a seminar. They'd never have to pay for nothing. Understand that. They give you misinformation, which is to keep you poor, and they keep the real information for themselves. Okay, that's what they really do. So you have been told misinformation. Carnival Cruises, That was never a good stock. Just look at the facts. You know, how much money have they made? Right? Are they paying a good cover call, dividend? Sure, they have the volume. I'll give you the volume, right?
What do you think
But if
about
the
the
volume
volume?
is going, if the volume is going down, why would you invest in it? You know, volume. Okay, so there's a long buy and there's a short buy. Long buy means you buy the shares. Short buy means you sell the share short. I mean, you want to make money when the stock goes down. Okay. So 53 million volume. I'll bet you that a lot of that volume is a short seller, is shorting the company. Matter of fact, you can see
that language of shorting. I never
you-
understand it.
you can see, well, when you short, you make money when the stock goes down. You understand that?
You make money when the stock is going down?
Yeah. Short, SHORT, equals make money when stock goes down.
Oh.
And then put long buy, which if you're gonna buy shares, that's a long buy. Long buy makes money when stock goes up. Okay, so Carnival Cruises has 50 million shares traded. A lot of those shares are shorting or selling. So volume by itself is not good. Volume with other things is very important. Well, volume by itself is actually good, but by itself, it could be shorting the stock, it could be selling short, it could be selling to get out of it. Okay. So Carnival, not good. I'm telling you how to select great stocks. I'm telling you how to do it. Don't listen to seminars, don't listen to books, don't listen to Kramer. Turn the TV off, just go by technical. Write this down. Technical, TECHNICAL. It's technicals. These are facts, not stories. Oh, look, COVID's gonna clear up and we're gonna do great. Yeah, that's your wishful thinking. And you need to consider that you're managing people's money that had to retire. So you can't gamble in Carnival hoping that the COVID's gonna clear up. That just doesn't make sense to me. Now, listen, this might make sense to you. We just think differently. I'm trying to tell you the right things. Don't think, plan out in your head, oh, COVID's gonna clear up and then we're gonna start doing Carnival Cruises. They were losing money before the COVID ever happened. So I don't know who told you that. Someone told you wrong. But, you know, grab some Tesla, grab some Skechers, grab some of these other great companies. You know, look for some companies that are good. Do your own homework. And you're gonna start learning how to do this stuff. You're gonna notice, you know, this is a good company. This is not a good company. This is a good even if they say it on TV, ignore them.
Okay.
Okay.
All right.
How we doing?
We're doing good. What is market cap? Is the
That's
share?
the whole value of the company. That's if you put all the shares and multiply it by the share price, that's the value of the company on the stock market. So a market cap is a selection. A good market cap is 15 to 25 billion, 15 to 25 billion, and put plus. Why? Because a market cap that's 25 to 15 billion is a growing company. If it's 50 billion plus, that's good. If it's 100 billion plus, that's good. When you start getting to 1 trillion, 2 trillion, they're so big that they're stable, which is good, but they can't grow as fast. They can't double or triple, right? So this is Apple, this is Amazon, Google. But if you get a company like, I'm going to tell you this, look at Chipotle, CMG. If you never see me again, I want you to know that Chipotle is a company that's designed for growth. They only have 50 billion market cap, but they can go to 100, 200 billion MC market cap, which means they can go 4 times in size easily. So in the next 5-10 years, if Chipotle keeps going, 50 billion, 100 billion, 20 billion, they're gonna be like they call it the organic McDonald's. You know, they have organic. Some of the food's organic, not all of theirs organic, but some food's organic, so it's more healthy. So this company is positioned for growth. 16.50 a share. You know, but they could do a stock split. You know, so that's the stock doubles of like 3,200. You know, consider that the high price shares are better. They're better because they've gone up and up and up. They proved themselves over time. They've gone up. Stocks that are $5, $10, $3, those are garbage. Get rid of them because those of them have come down. They haven't made money. They haven't proved themselves. Get rid of them. Stocks are doing great. $100, $200, $500, Tesla, $900, Chipotle, Apple. High price stocks are better. They're better because, and you won't hear this from anywhere. You'll hear people tell you, "Oh, the price doesn't matter." What? High price stocks are better because they've gone up so much. They prove themselves. Low stocks are garbage, or there's for some reason they haven't gone up, or there's other reasons. You know, maybe they have stock splits, but stock splits are usually done by companies that are higher price, not lower price. So you learn this by doing it. You take time. You learn. You'll get it. You'll get experience.
Oh, okay. So
Final
look at
question.
this one. Plug. I have that one. So that means it's bad, right? Plug is the one that they're installing charging stations for Tesla for the electric. And Blink, Plug, and Blink.
Look, if you were an employee and you delivered those returns in 10 years, you'd be fired, wouldn't you?
Oh, okay.
You can't buy a stock based on a news article. Listen, they would already had to be doing good. You can't put a piece of crap company, give them a contract and say they're gonna start making this for Tesla. They're gonna be doing good. No. That doesn't work that way. A company that is a qualified company has to be doing excellent to begin with. And then if they get a contract for Tesla, great. Or not. But don't get a crappy company that's gone down over 10 years and say, oh, they're gonna get a contract from Tesla, whatever. Then they're gonna go up. No, you don't know that. You have to go by facts, not your stories. Not what you think it's gonna do.
Oh my gosh. Okay.
And I'll guarantee you, no dividend, no PE, right?
Yeah.
And what's the share price? What's your share price?
I even left it. Let me go back to it.
No, don't look at it. It's too low. The share price is too low.
The share price is $23. Uh-huh.
Okay, well, that's low, but it's not too low. I like my share price for non-dividend stocks.
Mm-hmm.
I like my share price to be $100 to $400 a share. $100 to $400. Why? Because that's quality. Again, you're buying shares that have gone up and up, proven themselves. That's why they're good. That's why the price is higher. But example, Whitehorse, which has a 10% dividend, will never be $400. I'll bet my life on that. It just doesn't work that way. Stocks that have $400 are share growth stocks. You know, Tesla stocks that can go up over time. Possibly Starbucks, but probably not. Starbucks is more of a slow. But yes, Netflix, yes, Nvidia, AMD, these stocks that have high PEs that are going to be going up and up. Okay, I'm going to send you this recording. I want you to review, record it, download it, write notes, and send it to me. And then next week, want to do next week Tuesday?
Next week, yeah, we can do Tuesday. Yeah, I'll get in touch.
Any questions? Text me.
Okay.
Make some room in your account. Sell some more of those shares that don't make any money, so you can have room to buy more shares and make money. Okay.
Okay. All right.
Thank you, Joyce.
All right.
Take care.